So yeah guys, this is the trade that we took for gold. We literally opened with the gap here, the market went up, and then we came back to close the gap, and that's where I took my next gold trade. You can see over here guys, I'm actually swinging BTC USD on this account. I'm swinging BTC USD, caught the sell, and we're swinging it. And now I just recently took my gold trade. You can see over here. Took a 5 minutes entry at this point, and this is where the entry point is. And that's how simple it is. The market was at this point, shot up, created a gap, and then we came back to just fill in the gap over there. Then after filling the gap, gold is just respecting setup. So let's see how the trade plays out. Yes sir.
What's up guys, what's going on? Today I'm gonna give you guys a day in the life. This is now our second year here. Second year in Dubai, and it's been amazing. We're out here guys, look at this. We're gonna zips and matcha. Cartier. Look at the bro, you can see
what's going on.
Louis. I got a young Holy on the boy. And this is my bro right there. But bro, I just went light, you know. Easy thing.
Easy thing.
Easy.
27 boys. Plus one.
Plus one, my bro.
Yes sir.
Guys, gold continued to respect setup,
And we killed it.
we had to go risk free. We moved that SL above entry, locking in and protecting our profit. Also guys, this is a new screen, don't mind. On this account, we just scalp and swing, right? So this is a different type of trading styles. So here I'm continuously entering more trades wherever there's entries, and that's the strategy that I want to teach you guys. So this account was not one of the biggest. I just had to grow it gradually before I can take risks. And look at what we did guys, $123,000. Should I close it? You guys will let me know, but overall setup respected.
I'm going to give you guys one of the most important things that you need as a trader in order for you to become successful. Number one, you need a strategy. Without a strategy guys, you can never have profitability long term if you want to be a trader, because this right here gives you an edge in the market. Without a strategy, you're just simply guessing and not understanding on how to basically trade or approach the market. So now when it comes to strategy guys, I'm going to talk about 3 points. 3 points are very important. These are most crucial things that you need in order for you to have a strategy. In the world guys today, there's a lot of strategies. My advice to you is you only need to focus on one. If you focus on one strategy, then you will have an overall profitability. I'm a proof of that because we've been focusing on only one strategy for the past 7 years, guys. Yes, that is true. We've been trading for over 7 years. Trading doesn't really require you to be a genius or to really be book smart in order for you to have an understanding. What it needs is consistency. As long as you can do this over and over again, repetition is what gives an advantage in the market. Now, here's my 3 important tips or 3 important points that you need as a trader. Number 1, you will need trends. We have spoken about this a lot of times, especially on our previous videos. Trends are very crucial, mainly because without trends, you won't understand on whether to have long-term buys or long-term sells, right? In trends, we have particular things. We have a bullish trend, a bearish trend, and lastly, consolidation, right? Consolidation, I don't have to write it in full. Consolidation, I'm going to give you guys an example on the other side. When we have a bullish trend, a trend moves in this particular manner. When we see price basically pushing all the way towards the upside, and in that price, you're going to have these important key factors that help you understand whether you're in a bullish or bearish trend. First of all, in order for you to identify a bullish trend, you need to focus on higher highs. Now you might ask yourself, why do we call this higher highs? The reason we call these tops higher highs is because each high was higher than the previous one. Hence we call it a higher high. And at the bottom, we have what we call higher lows. Over here, we call them higher lows because each low is basically higher than the previous low. Now, why is it important for you guys to understand whether you're in a bullish or bearish trend? If you're in a bullish trend, guys, you have something that we call impulse move, right? An impulse move is the overall move of a trend. For example, in a bullish trend, the overall move is bullish, or I would say bias. When you're in a bullish trend, guys, you need to focus on overall bias. And when it comes to correction or pullback is simply retracements in that particular trend. In a bullish trend, correction or retracements is when you're looking for sells. What do I mean? It means that this particular trades over here, guys, you are only simply looking to scalp. Now, what is scalp? Scalp is only small positions in the overall trend, because our overall position here is bullish, mainly because overall the market will continuously keep pushing up. A perfect example is looking at gold. When the year started, gold has been on a very strong bullish rally. It was very advisable for you to look for buys if you're in a bullish trend. Now, the same is true for a bearish trend. What is a bearish trend, right? Which is right here. A bearish trend is when a trend is going towards the downside. And in a bearish trend, we have very important levels whereby we have a lower high, and again a lower high. At the bottom, we have lower lows and lower lows. Now, why do we call this lower low? Each low is lower than the previous low, which indicates for us that the market is actually going down. And each high is lower than the previous high, which indicates that sellers are actually dominating in this particular trend. So it's important for you guys to understand when it comes to trends that overall direction of a trend, which is an impulse move, dictates where you should probably look for swings. A swing trade is a trade that you can hold for days or weeks, and that will give you overall profits, especially if you want to be a swing trader. For example, in this particular trend, when we have a correction, that is when the market is simply buying. I said this before, guys. In a bullish trend, you're looking for overall buys. In a bearish trend, you're looking for overall sells. When you're entering buys in a bearish trend, you are simply looking for scalps. You're looking for small moves in the overall trend. It's very important for you guys to know when to enter and when to exit, because failure to exit at the right point, even though you are in profits, the market can inevitably eat your profits and your good trade can turn into your worst trade. Now, the last one that I'd like to talk about is consolidation. Consolidation over here is when the market is simply moving sideways, right? That's when you're going to have a resistance at the top and obviously a support at the bottom. The market is not giving us overall direction like a bullish trend or a bearish trend. It is simply just going sideways. You are simply looking to scalp in this particular market. When you enter a buy from the support, you are simply looking to exit at a resistance, mainly because you are trapped inside this particular range over here, which is called a consolidation. It's very important for you guys to know that in these particular markets, where do you want to be in order for you to become profitable? Now, when it comes to sell, the same thing is true. You need to know when to enter and when to exit, because the market is simply ranging in this manner. It's not giving you overall moves towards the upside. In a consolidation trend, we don't have what we call an impulse move. We only have corrections, or I would say we only have small moves in the overall trend because it doesn't have the overall direction. It just goes sideways. Now, here's something I need to talk about when it comes to trend. When it comes to trends, guys, there's something that we call trends in trends. Another term for it is top-down analysis. When you're doing a trend, guys, you need to understand that you need to start from a daily time frame, go to the 4-hour time frame. These time frames over here are what we call your bigger time frames. They're giving you overall direction of the market. You can sometimes include 1 hour as well. It also can give you overall of the market, right? And what I consider small trends, which are trends whereby you actually use if you're looking for entry opportunities, is obviously when you start from the 30 minutes time frame all the way to the 5 minutes time frame. These trends over here, we focus on entries. And I want to get to this point over here in this particular lesson. You're going to use this time frame to look for entries, and you're going to use this time frame to look for the overall direction in the market. So use top-down analysis and have an edge in the market. If you don't understand what's top-down analysis, make sure to also watch our previous videos where we go into detail. I can give you a small illustration of what I mean, right? Let's say the market or the price is moving in this manner, right? Let's say the market is moving like this, right? Overall, we are seeing higher highs, and at the bottom we're seeing higher lows, right? From a bigger time frame, this could be a daily time frame, right? From the daily time frame is a bullish trend, is the overall direction of the trend. Now, inside that bullish trend or inside that daily time frame, we also have another trend inside, which is trends in trends, and these are the smaller trends inside. You might remember I said something, right? In a bullish trend, if you get to an area whereby you might say, I remember the FX Gold said, if I'm in a bullish trend, I'm looking for overall buys, and you buy here, not understanding the overall trend in a daily time frame. This could be 30 minutes or 15 minutes. You are trying to buy here and continue pushing up. But if you don't understand the trend, then you will simply fail because you don't even know when the trends are changing from a bullish structure to a bearish structure. So you need to understand that top-down analysis works hand in hand when you need to understand trends. Always keep that in mind, guys. When it comes to the market, start from the bigger time frame and go in deeper to the smaller time frame. The second thing I want to talk about, guys, is key levels. Key levels, or you can say point of interest. This is very important in the market, guys. Key levels help you understand the market in a very important manner. I'll give you an example of what I mean by here, right? Let's say price is moving in this manner, right? We're having a bullish structure, and again, we're having a bearish structure. In order for you guys to understand key levels is that you need to find the high of the day, and secondly, you also need to find the low of the day. Now, I said something earlier when it comes to trends in trends. Sometimes a bullish trend can change from being a bullish trend and also turn into becoming a bearish trend. But in order for you to be able to capitalize on when the trend is changing, you need to understand key levels, or I'd like to say point of interest. Let me use another marker for that example. Let's say we are having higher highs over here, higher highs, which indicate that we are in a bullish trend. And at the bottom, we have higher lows. Now, from this area over here, we were supposed to have what we call a higher low over here. But what happened was the market actually broke that higher low. A low that is higher than the previous low failed to happen. Now we're having a low which is lower than the previous low. From over here, we are seeing something that we call a change of character, or we're having a point where we say we're having a change of trend. From a lower low, we're going to have a lower high. Here's the most important thing when it comes to trends, guys. When you're a trader, we know only two important things. You buy low, you sell high. You buy at a support or demand, and you sell at a supply or resistance. Now, in order for you to understand how to spot a supply or a resistance, is that you need to understand key levels. Once the market gives you a low, you're going to need to wait for the next high, which will be a lower high. This high is lower than the previous high, which is a lower high. And over here, we are having a very important area, whereby we call it a supply zone. All right? This supply zone over here, guys, is a very important key level or point of interest, because if you're looking for an entry, you need to look for areas like this. And this also indicates that we're having a what? A change of trend. It means that you should stop focusing on looking for overall buys and start focusing on looking for overall sells towards the downside. That is why it's important for you guys to understand key levels and point of interest. So key level is so important to a point that if the market again breaks outside the trend and reaches this particular area over here, we can still again look for the next sell towards the downside, mainly because this particular area over here is a supply zone. Sellers are dominating at this price over here. Hence we call it a key level or point of interest. It's important for you guys to understand that the market moves in such a manner that sometimes, even though you are in a bearish trend, the market breaks outside, shoots up, creating a big volatility towards the upside. You can hit a particular key level whereby a supply of sellers are chilling, and again, the market will respect that area or key level and it would shoot down once again. So this is why it's very important for you guys as well to understand key levels. The opposite is also true, especially when you have a demand. I'm going to use another example just at the bottom right here. Now, when we're having a bearish trend towards the downside, we can have something that we call a liquidity sweep, right? A liquidity sweep is when the market is basically hunting your stop losses. Once the market does this, it goes back up and pushes towards the upside. You need to identify a point of demand. What a point of demand is where buyers are actually relaxing or where buyers are mostly chilling. And once you're able to identify this particular area over here, as long as the market keeps testing that particular area over there, we have a demand of buyers chilling down there, pushing the market towards the upside. The last one is entries. Entries, you are able to find them at key levels. Understand, you use trends to understand overall direction and look for a point of interest, especially in those trends. And after you find that points of interest, that's when you look for entry possibilities in a particular trend. Understand, there's a lot of strategies out there. We have SMC, we have ICT, and we also have GTM. That is what you need in order for you to become successful. Obviously, guys, if you want to learn from us directly, whereby we go into detail on how to understand the market, simply go to www.gtmfsgo.com for you to have a clear understanding on how to understand the market and overall make a lot of money like we do. FS Go, your mentor, signing out.